All right, for pretty much our entire lives, the US dollar has been the undisputed king of global finance. It's just the way things are. But lately, you might have heard these whispers about de-dollarization, and those whispers are getting a lot louder. So, today, we're going to break down the very real cracks that are starting to show up in the dollar's throne and what it might mean for the whole global economy and, for you.
So let's just get right to the big question. Is the dollar's reign actually over? Well, the truth is, it's not a simple yes or no. It's more like a giant global tug of war with some incredibly powerful forces pulling in all sorts of directions. So let's dig in and see what the data's telling us.
Okay, first, a little reality check. All around the world, central banks hold a big pile of foreign currencies, right? They call them reserves, and they use them to keep their own economies stable. Right now, the US dollar still makes up a whopping 58% of all those reserves. So yeah, it's still the king, no question. But here's the thing, that number used to be over 70%. And that slow, steady decline, that's where our story really begins. And it's creating a real opening for some challengers.
So here's our game plan. First, we'll look at the geopolitical pressures that are shaking the dollar's throne. Then, we'll explore two major escape routes that countries are looking at, digital currencies, and, believe it or not, a surprising return to gold. After that, we'll piece it all together to see what this new multipolar money world actually looks like. And finally, we'll wrap up with what all this means for you.
All right, first up, the shaky throne. At its heart, this is all about power. And ironically, the way the US uses the dollar on the world stage is the very thing that's pushing other countries to look for the exit door.
So here's the nub of the issue. When the United States uses the dollar as a weapon, by imposing sanctions and cutting countries off from the global financial system, it's an incredible show of power. But every single time that happens, it sends a loud and clear message to the rest of the world. Hey, you better find an alternative or your entire economy could be held hostage to our foreign policy.
And this isn't some far-off theory. It's happening as we speak. China and Russia? They've pretty much ditched the dollar in their trade with each other. India is now buying oil from the UAE using its own currency, the rupee. And you've got economic giants like Brazil and China settling their trades directly, completely bypassing the dollar system. Look, these are not minor players. They're building entirely new financial highways.
Now, here's where it gets really interesting. This whole de-dollarization thing is happening at different speeds. You've got governments and central banks actively trying to move away from the dollar. But at the same time, a lot of ordinary people around the world still see the dollar as a safe place to park their money in a crisis. It's a fascinating paradox, right? The system is changing from the top down, but that trust at the bottom is still there. So, if geopolitics is the big push factor forcing countries away from the dollar, then technology is the pull. It's creating these powerful new escape routes. And guess what? They're all digital. And there are really two competing visions for this digital future. On one side, you have things called central bank digital currencies, or CBDCs. Think of it as a government-issued digital dollar, or a digital yuan. But on the other side, you've got decentralized cryptocurrencies, like Bitcoin, which exist totally outside of any government's control. It's really a fundamental choice. Do you want state control, or do you want decentralized freedom?
But, this digital escape route is loaded with traps. Public cryptocurrencies are just famously volatile. Can you imagine trying to run a national budget on something that swings up and down like Bitcoin? The global rules are a complete mess. And if you build your country's financial plumbing on digital rails, you basically paint a giant target on your back for hackers.
And the scale of this security problem, it is staggering. We're talking about an estimated 154 times billion dollars in illicit money flowing through crypto. This isn't just some theoretical risk. It is a massive, real-world challenge that has regulators all over the world scrambling to keep up.
So, if the digital path is so risky, where else are central banks turning? Well, this brings us to our third section, and it's this really fascinating turn back to one of the oldest, most traditional assets in human history. Faced with all this geopolitical risk and all this digital volatility, central banks are flocking to a very old-school solution, physical gold. And they're not just buying a little bit here and there. They are buying it up at a record-breaking pace, a pace we haven't seen in over 50 years. It's the ultimate insurance policy when times get uncertain.
So who's leading this new gold rush? Well, no surprise, China is a huge buyer. But look at this. So are countries like Poland and Turkey.
These are serious economies making a very clear, very deliberate choice to shift their national savings away from the dollar and into a hard asset they can actually hold.
Now let's put all this buying into perspective. The United States still holds a colossal amount of gold, over 8,000 tons. That's more than Germany, Russia, and China combined. But you can see the strategy taking shape here. Countries like Russia and China are steadily climbing up the ranks, building their gold reserves as a strategic counterweight to all the dollars they hold. Okay, so the story seems simple, right? Everyone's buying gold. It's the obvious move in an uncertain world. Well, not everyone. And this brings us to a really surprising twist in the story. Why on earth would a major developed G7 nation decide to sell off every single ounce of its gold?
Yep, that country is Canada. As you can see from this timeline, they went from holding nearly 1,000 tons of gold back in 1965 to literally zero by 2016. And their thinking was actually pretty simple. Gold is an unproductive asset. It just sits there in a vault and doesn't do anything. They decided they'd get a much better return by holding things like U.S. government bonds that actually pay interest. It was a really bold contrarian bet. Okay, so let's tie all of this together. When you combine that political push, the digital pull, and this new flight to gold, the outline of a brand new global financial landscape really starts to come into focus.
And here's the crucial takeaway. We are not heading for some sudden, dramatic collapse of the US dollar. That's not what this is about. What we are seeing is the slow, steady evolution away from a world dominated by one currency to a much more complex, multipolar system where several currencies and assets all play a major role.
And this new multipolar world? It definitely creates some clear winners and losers. Nations like the BRICS countries, they gain more financial independence. The U.S., on the other hand, could start facing some new economic headwinds, like maybe needing higher interest rates to attract investors. And we're seeing brand new financial networks, like BRICS being built from scratch to directly compete with those old dollar-based systems.
Okay, I know this has been a pretty high-level look at geopolitics and global finance. But what does any of this actually mean for you, for your personal finances? Let's bring it all back home.
So, how do you navigate all this? Well, first, diversification is absolutely key. This whole trend really just highlights how important it is to have a globally diversified portfolio, not one that's tied to the fate of a single currency. Second, keep an eye on inflation. If the world is less eager to buy U.S. debt, that could mean higher borrowing costs here, which often translates to higher prices for us. But finally, look for the upside. The same technology that's driving all this change could eventually make things like sending money internationally way cheaper and faster for everybody.
Which brings us to the final, and maybe most important question. In this new world with lots of competing reserve currencies, from the dollar and the yuan to gold and maybe even Bitcoin, who actually wins? Is it a single new champion that takes the throne? Or maybe the winner is the system itself, a system that's more complex, more balanced, and maybe, just maybe, more stable? That's the multi-trillion-dollar question for all of us to think about.